Hi, it's Liz from McHugh and Wallace. Just wanted to chat really about a few things that have sprung to my mind about the budget last week and my view on it really. So it might be a little bit political, my apologies if it is. So the Chancellor covered quite a few things and very much billed it as a tax cutting budget. Inevitably, as we all know, there's very few tax cuts. So the Chancellor's headline was that he's cut employees' national insurance by 2%, and that starts from the 6th of January in 24. One thing to note with that he hasn't made any cuts for employers, so our costs continue to increase with heating costs and all the other utilities going up, and generally wages increasing, especially with the living wage going up by nearly 10%. Then for the employees, although they have had their national insurance cut, there's the personal allowance, your tax-free personal allowance hasn't actually increased since, I think it's 6 years. So from inflation, which has been at 10% for a lot of last year, most people aren't going to feel any better off. In fact, they may well feel worse off. And a lot of, I think it was 20 billion that the government think that they had to spend. Most of that has been created by fiscal drag, by them not putting up allowances for a lot of things like inheritance tax and your tax-free personal allowances. One of the other things that he's made a big play about is full expensing for capital allowances, which actually came in last year. So I'm not quite sure why he's made such a big deal of that. It was actually made permanent last year as well. So it seems to be a bit of a rehash, but that is there. So anything that you spend on plant machinery and things like that, you'll get full tax relief for. We're all very familiar with that. That's been in for a number of years. And previously there has been a cap on it. And he's essentially removed that cap. But as I said, that was actually announced last year. Then one of the other little changes he's brought in, which probably didn't make much sense to anybody, but he's abolished what's called Class 2 national insurance, which is a really old, antiquated national insurance class which self-employed people pay. But it's actually very cheap national insurance. It's in about 190 quid this year. But it's abolished that and sort of dressed that up as being tax simplification. But it's instead of that now, if you want to pay a voluntary stamp for national insurance to keep your record up to date, you're going to have to pay, I think it's nearly £900 a year. So it's actually a tax increase, it's not a tax decrease. But yet again, smoke and mirrors, just sort of dress something up to sound really good. We've cut taxes for the self-employed. They haven't. If you want to pay a voluntary stamp in, then it's going to cost you more to do that. Then the final little point, again, it's really more of a fiscal drag issue, which is where a lot more people are being brought into 45% tax, because whereas that used to only kick in at 150,000, that's now kicking at 125,000. So that's a big change, which isn't really being billed anywhere. Yet again, they keep those sort of things very quiet and don't make any song or dance about those. But it is there, and it is going to be dragging a lot more people into 45% tax. Obviously, I would say with some careful tax planning, you might be able to avoid that, but come and talk to me about that. So I think really to summarise, I would say he's rearranging the deck chairs on the Titanic, hopefully.